I've been meaning to do a video on the TradingView platform for the volatility indicator for some time, so here we are. This is on the NQ. We're on the 2-minute time horizon, and I've got the quantum tick volume here at the bottom of the chart as well. The volatility indicator is denoted by these little purple arrows top and bottom of the price action. We've got one here, we've got another one here, and we've got one here. And what the indicator triggers is the fact that the price action has moved outside of the average true range for this particular contract on this particular time frame over the designated look-back period. So what it's looking for is volatility, in other words, a price move that is outside the norm. And there are two things that you can guarantee, which is this. Volatility is nothing more than the compression of time, and it's designed to trigger fear in you as a trader. It's designed to trigger primarily the fear of missing out. If the price moves very quickly, your instant reaction as a trader is to jump in and take a position in the market because of the fear of missing out. You want to take, you're there to trade, you're there to make money, you want to jump in. And you see it fast moving and you think, great, okay, I can get in here, I'm going to make some quick bucks and get out again. And generally speaking, it's the worst thing you can do because volatility is also associated with the participation of the market makers. And you can see down here, this is on the tick volume indicator for TradingView. You can see down here how the volume is associated with, particularly with these two spikes. When you get volatility in the market associated with the market makers or the big operators, you can assume one of two things. Either the price action is going to congest within the spread of the candle, or you're going to get a full-blown reversal. You can imagine what went on here. The price spiked up very rapidly. We had a big surge in volume. It was then racked back, and you can imagine all the traders up here are now getting squeezed, wondering whether this price is going to carry on or are we going to see a reversal. And in this case, we get a reversal, and it's no great surprise. There's a huge amount of selling gone in on this particular candle, massive amount of selling, and clearly signaled by the height of the wick. So there's lots of selling gone on in that particular candle, and ultimately, of course, it has reversed. We've seen a complete reversal in the trend, and all those traders would have either got taken themselves out of the market or got stopped out. Simple as that. Now, the beauty of the indicator is that it actually triggers before the candle has closed, which is important. It's not so important perhaps when you're on a 15-second chart or a 30-second chart or maybe even a minute, but if you go anything above that, it certainly is important because what it'll tell you before the candle has closed, if you're on a 5-minute time frame, for example, you would like to have that information at 2 or 3 minutes for sure. And that's the power of the indicator. Not only is it revealing volatility to you, it also reveals it before the candle has closed. So if you get one of these, you will see the trigger appears before the candle has actually closed off in that particular time frame. But what you're expecting thereafter as a trader is either for the market to congest or within the spread of the candle, or it is going to reverse. We saw another one here coming down off the highs there. We had a little bit of congestion and then we cleared away from it. That's fine. Into congestion over here. Then we had another trigger here. What happened with this one? Again, you can imagine what happened. Lots of volume coming in here. And the fear of missing out plays into the market makers, big operators, again, their hands. Bang, down comes the market. You jump in. What happens? Market reverses. Now, on this occasion, it hasn't reversed too far, but nevertheless, I can guarantee you there'll be several traders in there or many traders in there who've got stopped out or taken closed positions in panic that this is going to go all the way back up here. On this occasion, it actually continues lower. So that is the power of the volatility indicator. In principle, it is a very simple indicator. It's just based on average true range, but it is immensely powerful, and even more so when you use it in conjunction with volume. This is the tick volume indicator that we developed. Basically what it does is two things. It gives you a sense of the average height of the volume. Is volume high, above high? Is it very high? Is it low? Is it medium? What is it? So it gives you that perspective, and it also matches the volume bar with the actual price bar as well. So it makes analysis on a VPA approach very quick and easy to do. You don't have to try and match up candles. You can see instantly which candle is which and the volume associated with, and make very quick decisions based on the volume price analysis methodology accordingly. So I hope you've enjoyed this particular video. I just wanted to do one on the volatility indicator because it is so powerful. If you have a position in the market and it's in profit, then my advice, and I always give this advice in the webinars, is if it's in your favor, fine, close out, take your money off the table. Or if you're trading multiple lots, if you're scaling out, take some off, leave some to run. But ideally, if you've got a decent position, then close it out. You can always jump back in again if it clears. Once it's cleared the volatility candle, fine. So if it's a profitable position and you get one of these, invariably 99 times out of 100, I will close out for sure. If you're in a loss situation and it's a loss situation that gets worse, then that's a decision you have to make. It may work, ultimately unwind in your favor. It may not. That's a more difficult decision to make, clearly. But if you see one of these and you're not in the market, then all you need to do is wait, be patient, wait for the market price action to clear away from the volatility candle. And then once it's cleared that region, you're back to smoother price action and you can jump back into the market again. So I hope you've enjoyed this particular video. Very short, just on the volatility indicator. Lots more to come. So thanks for watching. See you soon and bye for now.